Hello, today we are going to talk about method for fundamental analysis, but first we can respond this question: what are the main economic variables and indicators applied for the analysis of finance and capital markets of the international economy? First, we must know that there are two types of analysis. The first one of the technical analysis, and another is the fundamental analysis. In this video, we will talk about the fundamental. This all us to establish the theoretical value of the financial asset and to anticipate its future behavior, knowing that a stock is undervalued or overvalued in order to make decision to buy or sell. This analysis has two methods. The first one is the top-down, used for macroeconomic analysis. This analysis starts with the country, then the sector, and finally the company. Macroeconomic variables that affect its evolution are analyzed. First, interest rates such as inflation, for example, demand inflation, rising raw materials and labor costs, and monetary inflation. The second part, we can talk about the exchange rate and like a currency depreciation and the public deficit. But we have another economic growth. It's important to know that a low interest rate raises stock prices. And with this, we can evaluate the general state of the economy and its possible effect on stock returns. Its purpose is to describe the future economic environment the investor will face and set the tone for the stock analysis process. The second method is the bottom-up work for stock valuation. It's study first the company, second the sector, and ends with the country in order to value the shares and compare the price resulting from the analysis with the market price, looking for investment opportunities. About valuation models, we have dividend valuation, like we have the by dividend yield that indicates the historical dividend yield of the sector and can be estimated for the next year. The second valuation by multiples such as price earning ratio, price earning growth ratio, enterprise value EBITDA, EBITDA, cash flow multiplier, and value ratio. With this, we determine whether the shares are undervalued or not. We know the growth and liquidity capacity, the profitability, and the risk of investing in that company, either long or short. Other ratios of interest, we have ROE, EPS, DPA, and CFA that we would ask more information about the company situation and its share price. The last one is free cash flow valuation. The latter is based on the fact that the value of the company is the value of free cash flows discounted at the weighted average cost of capital. Thank you for seeing this video, and I hope you can understand.